After hiking 75 basis points in the July meeting, decided that they would anticipated further rate hikes ahead. They said they needed to move to a restrictive policy. They said it was required for them to meet their policy goals of low unemployment and stable inflation.
Major cryptocurrencies are plummeting alongside a morning sell-off on Wall Street. By noon Eastern, Bitcoin plunged to $21,000, Ether fell below $1,700, and Cardano tumbled to 47 cents.
We could see higher lows established versus June, but the way things set up, they do look very vulnerable to a breakdown. Maybe that's later in Q4. We suspect that the bear market cycle might last even into the first half of next year.
As the Fed heads west, the markets go south.
As the Fed goes west, the market goes south. The Bitcoin price took a major hit from news and technical analysis. The U.S. Fed pointed to another interest hike next month to fight the high inflation, which ignited red signals in the crypto market. And now everyone is wondering if the Bitcoin price can revisit the $19,000 mark. Hello everyone. In today's video, we will be covering Michael Saylor's thoughts on the volatility of the crypto market, as well as regarding the crypto crash. Stay tuned till the end, as Michael will also be covering why he believes that Bitcoin has the ability to hold up to $500 trillion in monetary energy. Last week, everyone was excited with the crypto rally, but as the end of the week came to a close, the crypto rally kind of ended. Not just ended, cryptocurrencies nosedived very badly. Although everyone wanted the rally to last just a bit longer, the end may be nigh. That is, if we look at the 24-hour data of Bitcoin and Ethereum at the time, the top coins lost more than 15%. This erases all gains made over the last 7 days. The culprit of this sudden and sharp price drop could be a statement by St. Louis Fed President James Bullard, who came out in favor of a 75 basis point rate hike in September to rein in inflation. Let's see what Michael Saylor has to say on the crypto market volatility and the bear market. Before diving into the video ahead, be sure to subscribe for more videos like this. You can also hit the notification bell to always stay notified of any new video.
The volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way. If we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed, and that put pressure on all risk assets from the beginning of the year. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, is awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as a commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as an institutional investment-grade asset being embraced by regulators, legislatures, and large-scale investors. And the entire market's been very educated by this crypto crash. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators.
According to Michael Saylor, a crypto crash is a good way to see how much the market has been educated by this. And many regulators, investors, and legislation are coming in good light for crypto. But recently, regulatory uncertainty increased on August 17 after the United States House Committee on Energy and Commerce announced that they were deeply concerned that proof-of-work mining could increase demand for fossil fuels. As a result, U.S. lawmakers requested the crypto mining companies to provide information on energy consumption and average costs. According to data from CoinGlass, more than $400 million in long positions have been liquidated recently. Bitcoin literally hangs by a thread, as an increase in selling pressures sends major cryptocurrencies back to critical support levels. The number one crypto could return to the bottom of its current range if bulls are unable to step in and push back on this fresh bearish assault. When you put all that together, where does that leave you when it comes to risk appetite? When you see pullbacks such as this, is that a buying opportunity? Will you consider investing? Michael Saylor suggests that this bear market is troublesome for short-term traders, but if you have a long-term time horizon, you can play fashionably in a volatile market. If you like the video so far, be sure to like and share. Michael Saylor also explains that Bitcoin has the ability to hold up to $500 trillion in monetary energy. While he fully supports Bitcoin becoming a commodity, Saylor believes currencies such as yen, dollar, and euro will continue with nations managing and reorganizing a balance of power.
I don't think the world wants currency. So understand that money is composed of property and currency in the current environment. The currency is high velocity money, and the property is low velocity money. And the reason that currencies will continue to exist, like the US dollar and the euro and the yen, is because nation states will continue to exist. So until the European Union crashes and the Japanese government crashes and the US government is gone, there will be a currency that's mandated as a medium of exchange by that nation state. So if you look out over the next 30 years, I'm not forecasting the fall of all nation states. I think that there'll be CNY, USD, Euro. I think there'll be shuffling of balance of power. I think that the killer app is a mobile wallet sitting on a phone delivered by Apple or Google or someone, ideally Apple. Apple creates a mobile wallet, builds in a secure element that's like a hardware wallet, as an authentication device, implements multi-factor authentication, gives you the ability to hold digital euros, digital yen, digital pesos, digital dollars, and allows you to hold digital property like Bitcoin.
Sure.
And everybody on earth wants it. And as long as we have culture and nation states, you're going to have all those things. And the trend over the next 30 years is that the strongest digital property, a la Bitcoin, is going to eat into $500 trillion worth of property. Gold, precious metals, real estate, bonds, equity indexes, collectibles, however you store your money for the rest of your life. And then the strongest digital currency is going to eat into the economic value of the other currencies.
Michael Saylor stands strong with Bitcoin. Investors were also pretty confident that the $780 billion total market cap low on June 18 was a mere distant memory, but this bear market says otherwise now. So is this a bear market rally, or is this the start of a new bull? This to me very much looks like a bear market. Could Bitcoin and other cryptos challenge their June lows, or will the bulls buy the current dip? Let me know your thoughts in the comments below. For more videos like this, don't forget to subscribe, like, and share. I'll see you in my next video. Adios.